Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some things that I'm thinking about. And I do be thinking a lot lately, a little bit cautious. I'm not going to try to persuade anybody. This isn't what this channel is about. It's just I'm talking about what I'm looking at. I'm looking at a lot. I think there's a lot to consider. Maybe I'm too much in my own head here. Maybe not. We'll see this week. I hope we just teleport to 80K on Sunday futures open and most of this video becomes irrelevant. But let's build the decision tree. If this, then that. Take a look at some fundamentals and technicals. This is about probabilities, right? So if you're certain we're going to go to 80 this week, load the boat, risk. Love it, baby. If you're not like me, maybe you pull a little back. So I would definitely think of risk on, risk off. I would think of, do I need to be 100x long this week? Do I need to load up on miners this week? Do I need to buy those calls on coin this week? However you might think about that, just something to consider. Doing nothing is always an option. Most people, their cold storage, including me, that's not going to change this week. I still think we're going to well above 250 in the next year pretty easily. So on the trading wallet side, there's a little bit more massaging to do in and out of positions, in and out of cash or stables versus coin. Whereas, your cold wallet, you don't really touch most of the time. So my current allocation remains very much risk on, but that may change slightly throughout the week, depending on how bearish we start to look. I mean, the TLDR for this whole video is if we start to roll over a little bit, or if we start to print double toppy low time frame stuff, how low can we realistically go because of the ETFs? I don't think we can go to 54, especially not in a week, but that's where I would like, that's the trade I want. Okay, if we're bearish, fine. I don't like it, but we're bearish. And then we go from 70 to 54 and then 54 to 250. Okay. Like that's my preference, but ultimately it's up to price. Price pays. The bears have been wrong consistently for 2 years now. They don't know what the hell they're talking about. They're focused on all the wrong things, paying attention to all the wrong things. So this isn't about me trying to be right. I'm just trying to think, okay, what am I going to do here? Because things look a little bit iffy. Okay. So in no particular order for crypto, the pros and cons list, right? The biggest pro on this list, the thing that matters the most is ETF flows. They are still strong, multiple billions a week. We'll take a look at that. The real question here is if legacy rolls over, S&P, NASDAQ, NVIDIA, whatever, if that stuff gets angry, does that affect the flows? It may not, but that's something we're going to have to see, right? This is a whole new world out here, and we will see if TradFi cares or doesn't care. The Bitcoin natives like to think we are risk off as a asset class. That is not how we've acted historically. That may change over time. It may change with those onboarding into BTC now. They may view this as a store value opportunity, insurance, what have you, and that may continue the flows, let the flows flow, right? But if the potential bearishness in TradFi or rolling over potentially in TradFi is enough to spook the flows into Bitcoin, that's probably enough to bring us lower as well. It's just a question of how much. Good news is on Friday, Bitcoin was up, NASDAQ was down. Don't see that too often. That was likely in big part to the flows from the ETFs. Very few people own these ETFs still. Okay, the big money is coming. It's going to be slow. It's going to take some time. There's paperwork. There's meetings. Okay, this is not something that happens quickly. So it's kind of miraculous. We've seen the flows we've seen, and it's just one more reason to be hyper optimistic about the rest of the year, the next 2 years, whatever. I think cycles collectively are just going to melt completely. I think, yeah, we're left translated, sure, but what's a cycle? What's a cycle going to be when we have just infinite money flowing into this stuff? Funding is kind of reset. We'll take a look at that. Stablecoin prints have been out of control. The Tether demand, the USDC demand has been very high. Let's take a look at some on-chain stuff for that. And then this week, I'm not expecting anything to go wrong for the ETH update. I think that's the right EIP, 4844. It's on March 13th. But if I'm looking for reasons to be risk off between CPI on the 12th and some hard fork on ETH on the 13th, right? I don't want to be trading on ETH and or on an L2. All of a sudden, something may or may not go wrong and you can't access your trades or your positions. And, you don't want to put yourself in that position. Okay. So again, I'm not expecting anything to go wrong, but if something does go wrong, you're kind of screwed if you're expecting to access a DEX during that time, for example, on ETH. The bearish arguments are a mix of technicals, seasonality, we'll take a look at that. There's something going on with Bitfinex. I don't think it's bad. I just think that ARB is going to have to close before we go up, and it may not matter again back to the ETFs. Like, that is the most important thing. Crypto native exchanges, okay, sure. That might be an East-West thing. It might be a US, non-US thing. But there is a disconnect there, a dislocation with price on the BTC side. And then Coinbase, can they stay open, please? Like, can you figure your crap out over there and get it together? You've only had a decade. Every time we go up to a new all-time high, they just crumble under their own infrastructure, apparently. Meme coin season, that's not going to last forever. It can't, okay? A lot of the meme coins are the reason why stables are printing like they're printing, because there's demand for on-chain shenanigans, but that usually is not something that lasts forever, usually not a sign of health in the market. There's some token unlocks the rest of the month just to be thinking about, the big one being Arbitrum. May not matter in a bull market, I don't know, but I wouldn't want to be turbo long Arbitrum, for example, just in case. And then something completely stupid, but I'll talk about, are the moon phases for the 5 of you who know what I'm talking about there. And then for legacy, I'll save most of this for tomorrow, but a lot of the legacy arguments for bull bear revolve around liquidity. So if we are bringing liquidity into the ecosystem, that's favorable for S&P, NASDAQ, risk on type environment. We've been doing that through the reverse repo. If the reverse repo gets drained to zero, if liquidity conditions wane a little bit here towards the next couple weeks, that may be enough to halt our progress on the BTC side. Again, I don't know what's going to happen with the ETFs, but that's clearly the most important variable here. So we've got CPI this week. Like I said, it's going to be a higher month-over-month print. I don't know if the market's expecting that or not. I haven't really seen the expectations. March looks higher again as well, based on the government numbers, not based on trueflation. So there is a bit of a divergence there. And then we've got BTFP ending March 11th. The loans can be refinanced until 2025. I don't think this is going to be as big a deal as people think it is. It's a problem. It's an issue. It represents liquidity tightening, but I don't think it's going to result in dozens of banks exploding immediately, like maybe some of the macro doomers think will happen. So let's talk about some more crypto stuff. Again, in no particular order. We'll just go down the list here. Things to think about and consider. March seasonality, kind of voodoo type stuff, right? But we're well above expectations for March. The past 3 years have been bullish. This might be the 4th. We may close even on the month. I don't know. Just something to think about. The bullish months over the past couple of years have been slightly more bullish to the upside. Nothing really definitive here, but what I would love to see is a not so bullish March so that we can have a turbo bullish setup into Q2. That's historically what we've kind of seen. Here's the heat map. Some of this stuff has reset for funding completely, and it's sort of heating up again. The most risky nonsense is already back to maximum bonk, Pepe, the meme crap. I would love to see all that just get washed out to zero, ideally, but 50% I would take. The guy who's not closing his 13 million bonk position, I can't even get the words out. It's so ridiculous. Some people would say he can't win because he's not doing things appropriately, right? So we can't let him win, but funding is still quite hot on a relative basis to where it was. Now, it's not the end of the world. Funding can stay hot and be hot, but you have to ask yourself, if you're trading on leverage or margin, like, are we that bullish to keep going here? This does put a clock on margin positions because it means we need to keep moving higher, or people will start to close their margin positions just based on funding, as I did earlier today. There's no real signal there, but we have started to creep up a little bit. This is a busy chart looking at reverse repo relative to the Bitcoin price rates. I'll cover most of this tomorrow, but the TLDR for this is, look, we have injected $2 trillion from one instrument, the reverse repo, into the ecosystem by buying short-term US treasuries, okay? So the yield has gone from reverse repo to treasury yield. The reverse repo is almost empty. The green here is the inverse scale, for reverse repo. So it's at 445 billion-ish. So ultimately the question here is, what is the Fed going to do when this drains to zero, which is likely going to happen sometime this month. Are they going to time that with cuts? Are they going to time that with QT tapering? What are they going to do? It's just something to think about, but it clearly has had an effect on the S&P, on Bitcoin. And one weird little blip of an oddity, when SVB failed and BTFP opened, that represented a liquidity injection. So despite reverse repo in the green declining, we actually popped up in price. And I think the reason we didn't hold those highs when BlackRock announced their ETF application is because we didn't have enough liquidity to support prices. I mean, this sounds bizarre if you've never heard of this for the first time or hearing this for the first time, but there is clearly a connection between what's going on with reverse repo and the rest of everything. So we had a double tailwind. We had a double dose of reverse repo draining and the ETF hype, right? We'll never know what prices would have been without the reverse repo drain, but it was probably not be as bullish as it was, considering we had that additional tailwind. If we look at the inflation stuff, down here is really the big concern. So we've got Trueflation in the blue, still declining, and we've got the Fed nowcast on inflation rising. So based on rates alone, you would argue, yes, there's a positive real rate. We should be restrictive. Thanks to the reverse repo, we haven't really been that restrictive. And if CPI and core and all that other stuff keeps rising, that's not going to help the Fed make their decision to cut. So we'll see what they say at the end of the month on the 20th. But again, something else to consider that's not exactly bullish in the near term if inflation starts to get angry again, based on the government numbers. Okay, based on ultimately OER, which is the owner's equivalent rent piece. It plays a big part in that, along with insurance. These are the weekly flows, and we're continuing to make just massive, massive inflows, well above expectations. So as long as these remain strong, it's going to be tough to pull us down. Very tough. Now, if we have a down week in price and we have inflows like week 7, okay, that would make a lot of sense. If we have muted inflows in a down week, these don't have to correlate. They don't have to be 1-to-1, but they're going to be pretty close. You know, if we see 3 billion in inflows this week net, we're probably going to be at 80K because we're already at 70K. So I don't think that's too crazy to expect, but we do need those flows to continue. More towards the TA side, but if we look at the 20-week moving average, okay, I call it the CarpeNoctom Multiple, borrowing from the Mayer multiple based on the 200-day moving average. If we look at the 20-week moving average, typically we try to hug that as close as we can. We don't always return to it. We've talked about this before. But if I'm looking to DCA, for example, or looking to see how risky overbought we are price-wise, you know, we're here on the histogram. So we're certainly on the overbought side of things. You can see we're at 1.54 there. So yeah, we could go higher. This is going to adjust. We don't have the weekly print just yet, but it does say, yeah, we're a little overbought here. You know, I'm kind of looking for things to be bearish about. This probably isn't enough for a reversal, but I think it's enough to maybe just have a choppy slowdown week to allow some of these moving averages to catch up. Let me talk about stables for a second. So the stablecoin circulating supply change based on the TradingView number, which is probably based on just ETH, not Tron, I don't actually know, has just been voracious lately, okay? Even in Q4 last year, we had a mix of positive and negative supply changes for Tether and USDC. Fast forward to now, and it is just insatiable, okay? Just massive, massive positive changes. And if we look at the net, it's pretty clear. Markets right now just can't get enough USD. Cannot get enough. If we look at the circulating, it's just been parabolic, right? So this is really helping alts. It's really helping the meme coins and the most risky of the risky stuff. I don't think this necessarily slows down, but if it does, you know, that's going to be harder for the meme coins to keep up. Looking at the on-chain data for Tether, it's always interesting to see, okay, why are we printing so much? Is it just speculative demand? Or are we actually seeing a ton of activity on-chain? In Tron's case, almost 40% of the daily transactions are Tether. If we look at the value, changing hands on Tron, it's up to 14 billion a day. I mean, this is like a third of Visa's volume. Okay, it's getting extremely, extremely heavy. So if I'm the US government, you know, if I'm trying to look for some honeypot, right? USDC has already said that they're not going to issue anything on Tron. It's clearly all just a Tether show on Tron. So if I'm the US government looking for something to go after, it's Tron and it's Tether on Tron. Now, I don't think that's going to matter, but it's not going to be bearish for price. It's just something to think about that may be perking up here over the next couple months. If we contrast that with ETH transactions versus ETH Tether transactions, you can see the ETH Tether transactions are a sliver. This is largely because the Tron network is fairly cheap, but on a relative basis, what is that, 10% or something of ETH transactions are Tether transactions. But if we look at the adjusted value, much of ETH's transfer volume is actually Tether. It depends how Coinmetrics separates this, I guess, but by the looks of it, a lot of the volume lately on any given day has been Tether. You can see the separation here in 2021 when there was a lot of other activity. But as of now, most of the activity, most of the value transfer on ETH looks to be Tether related. And then if we add ETH Tether and Tron Tether transfer volume, that's like half of a Visa or something. I mean, the volumes here are getting incredible. Now, I'm sure there's a lot of churn between exchanges and wallets, and these look like they correlate, so there's probably something going on there, but just something to think about. Now, if we add USDC, there's clearly been a reason for the demand. Everything is picking up on the stablecoin side, whether that's a mix of speculative demand and or people in South America, Asia, Africa, trading Tether for goods and services. That's probably very likely as well. One other oddity this week has been USDT price, which is well above $1 relative to USDC. So typically when Tether is as high above $1 as it is, there's issuance to sort of fix the equilibrium, right? So there's creates. This tells me there's still more demand than Tether exists for. So we should see creates here. We should see more Tether into the ecosystem. There was some concern about New York Community Bank because Circle did hold assets there, or does hold assets there. I don't know how much exactly. It could be as much as 12% of USDC reserves. If we look at their transparency report, most of the reserve is sitting in the BlackRock fund. Some of it's sitting with banks, plural. So I don't know how much is sitting at NYCB. But by the looks of it, it looks like they will get bailed out, NYCB, right? I just bring all this up because, again, there was this issue, as we'll know, a year ago with SVB, right? SVB had 3.3 billion in Tether reserves, and somebody would have had to bail out Tether if the government didn't bail out SVB. And there was a massive flight to safety to Tether away from USDC in the orange. So we're not seeing that here. We're not seeing some issue with USDC, at least based on the Kraken prices. There's definitely an imbalance in the 3 pool, and again, most of USDC is sitting on Ethereum. So none of this really affects price per se, but it may be interesting and important to be aware of because there are some dislocations here on Bitfinex. There is a discount on the Bitcoin price. There's a premium on Coinbase. Whether or not this gets arbed out throughout the week, I don't know. Just something to think about. We typically don't go anywhere until the arb fixes itself. This is just a pretty massive premium that may need to get figured out before prices can go anywhere. There's also a long on Bitfinex that's unloading. That's not going to help us in the near term. This probably isn't one guy, but it could be. Could be one entity. You never really know who these people are, but again, just I'm looking for stuff, okay? I'm looking for why are we stopping at 70? Well, could be this. Could be some issues with some stable stuff that I'm not aware of. It could be some issues with Bitfinex. Probably a nothing burger. Just something to think about. And then we've got Deribit, some kind of Deribit just selling a ton. And it was big enough that Deribit themselves tweeted it out. Okay. So this could be a straddle. This could be a basis trade. I don't know. But I doubt it's just a straight short. But stuff like this appears to be having an impact on us in the near term. Before I talk about some Bitcoin charts, let me mention today's video sponsor, KrakenPro. KrakenPro is back. As a sponsor on this channel, KrakenPro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. KrakenPro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out KrakenPro with the link in the description of this video. And if you've not used KrakenPro before, they've really upped their game over the past year, adding a ton of new coins. This entire interface is completely modular, and it's the only spot exchange I continue to use. So definitely check them out if you haven't. All right, let's get to the Bitcoin chart. Like I talked about with the 20-week moving average multiplier, we are getting kind of far away from these moving averages. So this is the 50, 140, 20, and 1400. So the 50 and the 200 daily, we know. The 140 is the 20 week, okay? And then the 200 week is all the way down here. And it's just a probability game. How much further can we go? That's it, right? The answer is we could go up forever, right? There's nothing stopping any of this, but eventually we start to slow down at some point. The easier trade is just let this thing consolidate, give it some time. I mean, that's preferable for me, honestly. Looking at the weekly, these candles have been massive, and we don't even need a significant down weekly. We just need to sort of catch our breath up here, maybe at all-time highs, and then get ready for another push. If you look at 2020, you can see how we sort of stuttered at previous all-time highs. Then we stuttered again a little bit at 40. So it is insignificant in the long run, but it is significant if you are trading on high leverage this week, right? If there's a down week this week and you're on high leverage, that's not going to be fun for you. Now the supports on the cloud on the weekly are all the way down here at 43 still. And the red line, the key June, is at 45-ish. I don't think we're going to go that low, but there's not a lot of support up top to sort of save you if things start to roll over. We can look at VPVR, we can look at yearly pivots, we can look at previous all-time highs. So there are some supports maybe in the 50s and the 60s, low 60s, but there's not too much up here. Another concerning thing was on the weekly B bands. We both opened and closed above the weekly B bands. Now, I don't have hard data on this, but generally, you typically don't see mega continuation beyond that. Now, it could be different this time. We have ETFs. Again, that's the most important variable and factor here. But if I was just trading the TA, I would say, yeah, let's see what happens this week. Okay. So this isn't bearish. It just says we are turbo overbought on Bollinger Bands. Okay. And we can continue to walk up the bands. We can continue to be bullish. That's totally fine. But that is significantly overbought on the weekly. Looking at the old pitchfork and the pivots with some fibs in here, the no-brainer eventual target in the near term is 6 figures easily. You know, the question is, do we get there in a straight line or not? Pivot support at 62. If we get turbo angry, we probably retrace to the top of the previous pitchfork. And then if catastrophe strikes, okay, then we go back to the midpoint, which would be probably around 40. So this is probabilities. This is not an expectation. We still have halving that's coming up here. The pullback would satisfy the having heart attack enjoyers who are expecting something to happen in and around halving. I could care less. I just want to be on the right side of the trade. Okay. So the immediate support based on the pivots is at 62.7. And popping on the daily cloud, not only do we have a TKC clamp, which we had for all of Q4, okay, where there was a large separation here. It's not the end of the world, but we are very far away from the Tenkan, the sort of low time frame moving average. So once again, even the cloud is saying just be careful here because we are overbought. I would argue on a pretty extreme basis. You can see the last time in October, November, we didn't keep moving up until the Tenkan at least caught up with price. So ranging from 63 to 70 this week probably makes the most sense based on the read on moving averages and the cloud. Ultra low timeframes, we've got some mess of a ascending triangle rising wedge. I don't really know. But if this does move up for whatever reason, then your targets would be like 74 to 79, depending on how you want to measure this. It's just not pretty, you know. There's also a channel here that we sort of broke down from a little bit. There's nothing to me that's exactly super clear cut, because if this was an ascending triangle, the breakout sort of should have happened, but didn't really go anywhere. Maybe that's a weekend effect. You know, again, there's just not enough here for me that's super clear cut. And if I'm looking at low time frames, I'm already in trouble because anything can happen on the hourly. Okay, you can take the signals, they can be real, but ultimately higher time frames rule the day. Now there is something called moon phases. Okay. And new moon, rising moon, bare moon, bull moon. For the red-green colorblind people, they're not going to be able to see what this is, but the previous moons have been bullish. You know, again, this is silly. This is voodoo. I get it, but this is not a bullish moon. I'll just stop right there and let you digest this beautiful, beautiful chart. something that many people actually do trade off of. Okay, but I don't really take that too seriously. Lastly, we've got the S&P, which is in a rising channel, bear div. You know, you got everybody talking about this Barron's cover, which whatever, who cares? Everyone's like, oh man, this guy's falling. Barron's is bullish. Look at this cover. Such a contraindicator. I don't know if I'd go that far, but if this does start to roll over, I don't think Bitcoin crypto is going to be too happy. NASDAQ, kind of the same thing. Rising wedge, rising channel, bear div. Targets are higher, but does it really have the juice to keep going? And then lastly, NVIDIA, which definitely had a bear div starting to grow, sort of completed, and that candle is not exactly happy with the bearish engulfing. So we talked about a lot of random stuff. The most important for sure is the ETFs. And if we remain bullish through legacy bearishness, and then legacy flips the pendulum bullish again, man, we're going to skyrocket on the Bitcoin side. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.